So in this video, we'll be showing you clips from 5 different videos from our pre-scene analysis pack. And the first clip is from the pre-scene analysis series. It's vital that you fully analyze your pre-scene, and this requires a detailed examination of the case study, ensuring that every section is fully understood. So our pre-scene analysis video provides a page-by-page analysis of every section of the pre-scene, and it ensures you don't miss anything important, and it helps you to build a comprehensive understanding of the material. And this is vital if you're going to gain high marks in the exam. So in this clip, we've taken a section from our pre-scene analysis video series.
Okay, so that is the introduction. So we've got a very broad understanding of Cartn. There are the dual revenue streams. We've seen the links to the syllabus and we found out our role. Now we can get to the gripping nuts and bolts story of food packaging. And you'll see we've got 3 levels of food packaging, or 3 classifications of food packaging to think about. And that's primary, secondary, or tertiary. Now again, this seems like a really throwaway sort of line, just kind of one sentence, but actually, primary, secondary, or tertiary structures everything that follows. So they're not just descriptive categories. Actually, what they're doing is mapping a hierarchy of technical complexity, regulatory obligation, and commercial risk. Now, Cartn's deliberate choice to specialise in primary, as we find out later on, is a strategic positioning decision that's got real consequences, and understanding why they do this matters for how you analyse the company. But what we're going to do now is... Now, if you think I'm struggling to find my marker, it does look different on my screen to how it looks different on your screen. So I'm not going mad. If you're thinking, well, why can't he see it? It does appear differently in the final video to how it looks on the live recording for me. So sometimes when I can't find my marker, that's why, and apologies in advance. Okay, so let's move down now to the kind of first and most important tier, which is primary packaging. So this is kind of Cartn's world, and everything that Cartn manufactures sits right here. And what we learn in paragraph number 1 is that primary packaging actually comes into contact with the food, for example, product itself. So it contains the food and it protects the food, really from contamination and things like that. Now this kind of protection, this kind of fact that the packaging comes into contact with the food, this creates a cascade of obligations. So we need food safe materials, we need chemical inertness, we need hygiene standards at manufacture and regulatory compliance across every jurisdiction where the food is sold. Now, non-compliance means a recall, it means possible legal liability, and of course it definitely means a reputational event for the food manufacturer. Now, this kind of risk profile transforms the commercial relationship. So a food manufacturer choosing a primary packaging supplier is actually choosing a technical partner whose performance directly affects product safety and brand. And that is why established relationships in primary packaging are sticky, and why switching decisions are not made lightly. Now, for Cartn, operating exclusively at this tier, that stickiness is going to prove to be a structural commercial advantage. Okay, then we come down to the second paragraph, which is really kind of giving us the facts that primary packaging covers a wide range of material formats, but notably cartons don't seem to be on this list, which is strange given Cartn's name. Now, obviously what we do have is glass bottles, jars, protective film, plastic bags, metal cans, no cartons, no tubs. So CIMA is deliberately showing us the breadth of primary packaging before narrowing to Cartn's specific product. So there's no cartons and no tubs in this primary packaging list. And that's not to say that it's not primary packaging, that is cartons and tubs. It's just showing us that there is a huge breadth of primary packaging. Now, each format has a completely different commercial profile. So glass is going to be premium, but of course it's heavy and it's fragile. And metal cans provide excellent barrier properties, but they're going to require special lining to prevent reactions with kind of acidic contents, for example. Whereas plastic film is nice and cheap and nice and flexible, but of course there are sustainability issues around plastics, and of course the whole debate around microplastics as well that's happening at the moment. Now then, the carton format is just one format amongst several. But all of them are competing for the same food manufacturer clients. So really what we're doing here is getting an understanding of the competitive landscape within this specific primary packaging tier. So Cartn, the company, is not the default choice, and cartons, the product, aren't the default choice, but it may be the right choice for specific applications, and this is something we will follow up in video number 2. And then finally, in this primary packaging tier, we get an example, and it's a simple example, and it's just saying, well, a single layer plastic bag does one job here. It keeps moisture out in order to maintain freshness. Now, I feel this is a deliberately simple example, but it is a useful reference point for understanding what carton is not. Now, we're going to find this out later on, but carton has a laminated carton to simultaneously block moisture, oxygen and light, prevent chemical interaction between the contents and the aluminium layer, and it also provides structural rigidity for kind of handling and shelf display, and all of that takes place in a single permanently bonded structure. Now, of course, what we're looking at here is a single plastic bag. So Cartn's engineering complexity behind its carton is a commercial barrier. So a food manufacturer wanting that combination of properties that our carton offers cannot go to a simple film supplier. They actually need a manufacturer that is capable of producing and quality controlling a multi-layer laminate to exacting specifications. Now, we've just said this is quite a wide breadth of products in the primary packaging market, but this kind of complexity, this quality, this helps us narrow the competitive field, and it's going to be a key reason that Cartn holds the position that it does in the world. Okay, so let's move down now to something we call, or they call, or is called secondary packaging. So secondary packaging is basically, if I can find my marker, an additional protective layer that wraps the primary layer, and its main function is kind of protection during transportation and storage. So you can see the narration I put on screen. Secondary packaging's main job is to protect the primary packaging on its journey from factory to shelf. So it prevents it from being crushed or contaminated or damaged before it actually has a chance to reach the retailer and then the consumer. So the food safety obligation is going to be lower here because there is no direct food contact. But obviously the physical protection function is commercially significant. Now, for Cartn's clients, secondary packaging is what travels through the distribution system, what sits in the warehouse, what gets stacked and unstacked multiple times. So its integrity during that journey matters. Now, as we move on through the paragraphs, we come to another kind of important element about secondary packaging, and it's that secondary packaging is often what the consumer sees first. So that makes it not just a protective package, but also a branding and communication tool as well. So basically this paragraph is adding a completely different dimension. So secondary packaging is the consumer's first brand interaction. So they're in the shop, they pick up the box, they read the label, they respond to the design and the print quality before they ever see the primary packaging inside. And that commercial reality is part of what justifies Cartn's consultancy function. Now, a consultancy that helps clients design packaging systems can add real value at the secondary layer, advising on how primary and secondary work together visually and functionally to maximize shelf impact. And so we get this in the example in the third paragraph when we're talking about breakfast cereal. Then we get the paperboard box, that we all see. That's the secondary packaging. And then we got our sealed bag that's used as primary packaging inside the box. So this kind of example neatly illustrates the dual function of secondary packaging. So the box protects the inner plastic bag from being crushed on shelf and in transit, and it also provides this kind of large, flat, printable surface for branding, of course, nutritional information and promotional content in a way that just having that kind of flexible plastic bag kind of wilting on the shelf simply wouldn't be able to. So the box is simultaneously doing two things. It's doing a logistics job and a marketing job. Look at this, the humble cardboard box doing two jobs at once. That's more than I can do, that's for sure. So really, the point about ease of display is really commercially important. So supermarket buyers really care about planogram efficiency, how easily products stack, how clearly they present, how much handling they require during shelf restocking. Now, a rigid box, of course, is far easier to manage than a floppy bag. And that retail handling advantage is part of why secondary packaging exists, even for products that don't strictly need that kind of physical protection.
Next up, we've got a clip from our strategic analysis. It's extremely important that you have the ability to identify how the pre-scene relates to key models and theory, and the examiners will expect students to demonstrate a good understanding of the models and theories and make the appropriate links to the case study during the exam. It can be hard to fully analyze a company using models you've only recently learned and be confident that you've got it right. So our strategic analysis has done that hard work for you. So in this clip, we're going to take a look at our strategic analysis video.
We are going to start by zooming in and taking a look at the organization's mission. And we divide mission into several sections, and the first of those is the purpose. Now here we've really got two distinct value propositions that are side by side. So for packaging clients, Cartn's purpose is to enhance the perceived quality of their food products at retail. So that's a quality and brand argument, not a cost argument. And for consultancy clients, it's to apply engineering expertise to recommend the most suitable solution. Now, both are premium positioning statements. Neither says cheapest or fastest. So that's a really quality-led purpose that goes through everything that Cartn does. Okay, then we come to strategy. And so really there are three strategic choices here. Firstly, we've got specialist in cartons and tubs only. There's no cans, no glass, no flexible films. Secondly, we've got dual model. So we've got manufacturing and consultancy under one roof. And we've also got a global footprint that's built specifically to deliver local knowledge, not just a local presence. And perhaps the dual model is the most significant of these because it's the choice that separates Cartn from every comparable competitor, including Valbox. And it's the choice that the margin gap asks us to justify. Okay, then we can move on to values. So obviously what we're thinking about when we think of Cartn, we are thinking of technical excellence, reliability, on-time delivery at promised quality, and heavy staff development investment. These are the operating commitments that support the quality-led purpose. Now, the on-time delivery commitment in particular is not aspirational, it's a commercial obligation. So a food manufacturer whose production line stops because packaging didn't arrive, they've got a real financial problem. So Cartn's reliability is the commercial foundation of those client relationships. And our final stage in mission is the policies. So obviously we know we've got IFRS reporting, that's required by Harlandian law, and it's relevant to the IAS 21, IAS 38 and IFRS 15 issues that we covered in the pre-seen videos. And we've also got standard sizing because that keeps production runs efficient, and aseptic process standards are the highest complexity operational policy in the business. It's non-negotiable for UHT dairy and long life juice. And also let's not forget the advisory only consultancy boundary. That's an explicitly stated policy. Cartn designs, specify and recommends. It does not install. Okay, so there we go. We've got a quality-led purpose, a focused strategy, reliability-based values, and an advisory-only boundary, and that all defines the scope of Cartn. And the kind of four elements we've looked at are consistent and basically mutually reinforcing. Okay, that is our mission. What we're going to move on to now is the balance scorecard, which of course looks at performance across four perspectives. So we're not too focused on the financial, though it does look at the financial elements too. What we're going to do is go quadrant by quadrant. Okay, so our first quadrant is our financial perspective, and these are the kind of metrics we'd be looking at here. Well, we know from our finance video, that revenue was up by 7.5%, operating margin rose to 11.3%, our return on capital employed from 17.8 to 25.9%. So obviously we've had a strong year by any measure. But obviously the Valbox comparison is used for a reason. So we got a 16.6% margin and a 35.5% return on capital employed comparison. Now that's for a pure manufacturer. So that kind of gives us an indication that the dual model may be creating a structural efficiency gap. And we also know the final metric, the dividend payout ratio at 79%, well, that limits the retained funds that's available for large scale research and development. Although we do know that profits are still partially retained. So really what have we got here? Well, the financial perspective shows strong current performance with an unresolved capital allocation question underneath it. Okay, then we've got learning and growth perspective. And this is really where the questions sit. So we've got heavy staff training investment. That's a stated commitment, but the 79% payout that we've just been talking about ratio raises questions about whether it's adequately funded. The patent balance at 142.6 million, unchanged across both years, could indicate limited new capitalized development, although it could also affect amortization, offsetting additions. The pre-scene doesn't confirm which. And the recyclability R&D is in progress with no timeline. So the learning and growth perspective is where the foundations for future competitive advantage should be strongest. And right now, I would say it has more questions than answers. Okay, so then we've got the internal processes perspective. So aseptic process capability is at the top of this list for a reason. It's the highest value technical process that Cartn operates and the strongest competitive kind of lock-in in the business. Now, a client whose filling line is calibrated to Cartn's aseptic specifications faces enormous cost and disruption to switch. The laminate roll supply model creates the same lock-in at a different level. The client's folding and sealing machinery is still calibrated to Cartn's laminate dimensions. The sustainability committee sits here too. Cross-functional monitoring of sustainability performance is an operational process, not just a governance one. And then finally, we've got our customer perspective. So we've got 4 items on screen, and each one really is a switching cost or a client retention mechanism. On-time delivery at promised quality is the commitment that keeps food manufacturers loyal. Their production lines depend on it. The design software embeds Cartn systems into how clients manage their brand assets. Standard sizing simplifies client production line management, and the consultancy synergy clients sometimes become manufacturing customers is the commercial pipeline that justifies the dual model. Sometimes here is the honest qualifier though. It happens, but it's not guaranteed. Now, there we go. That's the balanced scorecard. So we can see that we're financially strong in the current period. Customer and process perspectives show real competitive depth, but the learning and the growth perspective reveals unresolved questions about the investment foundations for the future. Okay, there we go. That's the balanced scorecard. Let's go into governance now. We got a 10-item checklist here for governance best practice, and you can see what I've got on screen. So firstly, number 1, the CEO and chair are separate. That's a fundamental governance requirement for a listed company. Gui Quan Lee runs the business and Evelyn Koi chairs the board. That separation prevents any single individual controlling both the executive management and the oversight of that management line. Items 2 and 3 are unclear. 4 NEDs are present, but the pre-scene gives us no information about their backgrounds, independence from management, or committee assignments. And items 4 and 5 are kind of partial, not disclosed. So we know a sustainability committee exists, but the broader risk framework isn't described, and director's pay isn't mentioned at all. There we go to our next group of items. So obviously item number 6, the financial reporting and control. That's a clear yes. We've got IFRS reporting. We've got a finance director with management accounting and financial reporting responsibility. Item number 7, the information for directors. That's partial, and perhaps that is the most important gap on this list. Sustainability is reported to the board, but there is no segmental reporting on manufacturing versus consultancy. And without that, the board cannot make a fully informed decision about the dual model. And then we've got a series of best practices which are unclear. But of course, as the note at the bottom says, look for any kind of governance gaps that can affect risk, control, and decision making, because of course these could be places for examination.
We're casting the net a little bit wider now with a look at the wider industry in which the pre-scene company operates with our industry analysis video. It is critical to demonstrate to the examiner that you have fully understood the pre-scene industry as a key element to gaining extra high marks in your case study exam. Researching the industry can be a laborious process, especially when you're not sure which information is useful and which isn't. And our team has spent hours doing this research for you, finding the information that will help you to achieve a wider perspective of the industry and build a deeper knowledge in preparation for your exam. So in this next clip, we'll be taking a look at our industry analysis video.
Now, food packaging matters because food has to move through the real world. It has to be made, stored, transported, displayed, sold and used, and all of that creates risk at every single one of those stages. Products can be damaged, contaminated, spoiled, or wasted long before they reach the customer unless the packaging does its job properly. And this is why packaging sits at the centre of several different priorities all at once. As we've said, it protects food, supports transport and storage, helps businesses communicate legally required information, supports branding, and can also reduce waste by extending shelf life. This means that packaging is more complicated than it first appears. The pack is not only there for the food, it's to make the wider system work. And once you start to accept this, the industry starts to look much more strategically important and, luckily for you, much more interesting. So let's move on to why packaging matters more than how it first appears. Now, as we've spoken about a little bit already, good food packaging is doing several different jobs at once, which is where the complexity comes in. So, first off, just to run through them again, it must protect the food from damage. It has to help preserve the quality. It may need to keep out air, moisture, or light, and it must carry the right information. To go into a little bit more detail about logistics, the packaging must work efficiently in production, storage, and transport. Often, it also has to help the product look appealing on the shelf as well. Now, this means that the packaging is not just about containment, it's about performance. If the packaging fails, the consequences can spread really quickly. Food might spoil sooner, products might be damaged in transit, legal information might be missing or unclear, and more importantly, maybe the customer might lose confidence in the brand as a result. And this is the reason that the industry is so full of trade-offs. A package that uses less material may sound attractive, but if it keeps the food less effectively, the result may be more wasteful further down the chain. So the real question is not really whether packaging is present, but whether it is doing enough work to justify the materials and the costs that are involved in making it. Okay, let's move on and think about a history of the packaging industry. And we're going to think about how it moved from simple containers, maybe as you can see in the photo on the left, a sort of barrel, or maybe before that a jar or amphora, into the things that we know and love today. So, people have always needed ways to store and to move food. Early forms of packaging include things like clay pots, woven baskets, and wooden barrels, what we're seeing on the left of the picture. Glass bottles and metal cans start to come in a little bit later, but for a long time, the core purpose is just containment. The package mainly existed to hold food and to make it easier to handle on an individual level. Now, what changed was industrialization. As food production became more mechanized, cities grew and supply chains became longer, so packaging had to do more. Food often had to travel further now, it had to stay usable for a longer time, and it had to fit into a larger, more standardized system of production and retail. Now, this meant that packaging had to support preservation, transport, automation, and information, not just storage as it used to. Over time, we can see that packaging has become a specialist industry in its own right. It's stopped just being a support function, and it's become an important part of food manufacturing, logistics, and also retail. This matters because it explains why packaging companies now compete on technical capability, production quality, service reliability, and innovation instead of just supplying containers as they may have done in the past. So, let's go into some more detail about why packaging became so important, because there are 3 long-term changes that help explain this and where we are today. First off, we have changing lifestyles. So as supermarkets, convenience foods, ready meals, and on-the-go eating became more common, packaging became central to how food is bought and used. Now, the second is longer supply chains, that we mentioned in the history section. Food now often travels further than it once did, which increases the need for protection, shelf life, and reliable handling. Finally, we've got higher standards. Customers and regulators now expect food to be safe, clearly labelled, and consistent, so packaging has to support compliance as well as practical use. Now, at the same time, there is an obvious tension built into the industry. Packaging can, of course, reduce food waste by protecting products and helping them last longer, but it also creates waste itself. That tension sits at the centre of many modern debates on packaging. It's the one reason the industry faces both commercial importance and public scrutiny at the same time. So let's move on, and we're going to think about the fact that we consider the packaging industry is a mature industry, but one that is under pressure to change. Now, it is mature because many formats, materials, production methods, and supplier relationships are already very well established. Competition is often strong, and many parts of the market are dominated by large, experienced firms with deep technical knowledge and already set up large-scale operations. However, maturity does not necessarily mean stability. The industry is under pressure to change. Governments are tightening environmental rules, customers are asking harder questions about waste, recyclability, and the true impact of packaging. Businesses are being pushed to redesign products without damaging performance, safety, or costs. And this creates an interesting strategic challenge. Packaging firms are not building from scratch, they're trying to improve systems that already work in important ways, whilst responding to pressure from regulation, customers, and public opinion. In other words, the industry is not being asked whether it can change, it is being asked how quickly and how well it can change. Okay, let's go on to what counts as food packaging. Now, food packaging is often grouped into 3 distinct levels, and this distinction is really useful because each level does a different job. Now, what are the distinctions, you might ask? Do not fear, we have them up on the screen now. So, let's start with primary packaging. Primary packaging is the packaging in direct contact with the food, things like yogurt pots, drinks cartons, trays, or film wraps. Now, this is the most important level for food safety and for product protection. Next up, we have got secondary packaging, which groups primary packaging together. So, for example, a sleeve, multi-pack wrap, or outer box. Moving on to tertiary packaging, this supports transport and distribution, using things like pallets, corrugated cases, or stretch wrap. Now, this matters because food packaging is not just about what the customer sees in their hand. All 3 levels affect the cost, logistics, handling, and waste. A business could make a sensible looking improvement to one layer, but still create a problem elsewhere in the system. So, when analysing packaging, it helps to think beyond the obvious visible pack. The wider system matters too, especially in a business-to-business industry where transport, storage, and supply reliability can be just as important as shelf appearance. Let's move on now to what packaging has to do, because packaging has to perform several important functions, and those functions, unfortunately, do not always sit comfortably. So, first off, we have the idea that it must protect and preserve the food by guarding against damage, contamination, moisture, light, or spoilage. Now, it must also support food and safety compliance, which means being suitable for food contact and carrying the right information. It must also offer convenience, which may include being easy to open, reseal, portion, or to use in a microwave or freezer. It also must support communication and branding, helping a product stand out whilst also carrying ingredients, allergens, nutritional details, dates, and instructions. And finally, things are increasingly being judged against sustainability goals, like material use, recyclability, and wider environmental impact. Now, the difficulty is that these different aims can pull in different directions. For example, a highly protective pack might reduce food waste, but use more material, making it less sustainable. A simpler paper-based solution might look more sustainable, but it might need extra coatings or design features to perform well. There is rarely a perfect answer. All there is a set of trade-offs that need to be managed intelligently. Okay, let's move on to packaging materials, services, and most importantly, what all of this means for Cartn. So, food packaging can be described by both material and format. So, flexible packaging, for example, includes films, pouches, and wraps. The other main categories are rigid plastic, paper and paperboard, metal, and glass. But we also have composite or multi-layer packaging, which combines materials to achieve specific performance benefits, but is often harder to recycle. So let's get on to thinking about how all of this applies to our pre-seen company. Cartn is a good example of why food packaging should not be thought of as a simple manufacturing business. Its cartons and tubs are doing several different jobs at once. They're protecting food, supporting shelf life, presenting the product well, and working smoothly with the customer's own production process. Now this matters because Cartn's customers are not just buying something to put food in, they're buying packaging that has to perform reliably in a wider operating system. And this helps explain why it's safe to say that Cartn sells more than just physical packaging. Alongside manufacturing, it also offers consultancy on packaging systems and production line compatibility. In other words, it's helping customers solve technical and operational problems, not just supplying cartons and tubs. This makes the business more valuable because it becomes part of how the customer keeps their production running effectively, and we'll get into this more as we go through this video. But this also shows where Cartn's real strength may lie. It's not only in making packaging, but in combining manufacturing, technical advice, and customer service support. At the same time, it is an industry where, as we've said, sustainability is becoming a bigger commercial issue. So Cartn's future success is going to depend on whether it can keep improving its products without weakening the performance and reliability that customers depend on.
The next clip is taken from one of our most popular videos, the Top 10 Issues. The Top 10 Issues video identifies the 10 most likely issues to appear in the exam based on our expertise and experience in this area. And our expert gives guidance on how to deal with the issues in your answers, provides advice on which models to use, and key points that you should raise. Based on our experience of analysing CIMA case studies for over 10 years, our predictions have been extremely accurate in previous exams, with around 70 to 80% of topics in the real exams being covered in our top 10 lists. So take a look now at this clip from our top 10 issues video.
But I do have to say, issue number 1 is a bit of a key point here, because sustainability is the dominant theme of the Cartn precinct. It runs through every section: the industry context, the product architecture, the business model, the board structure, the financial statements, and all 3 news articles in video number 6. There is barely a page of the precinct that doesn't touch sustainability in some form. Now, that level of prominence means examiners are likely to test it, but the only question is how. Now, at MCS level, examiners aren't just going to be testing sustainability as a kind of isolated standalone topic. They're going to embed it in strategic decisions, capital investment questions, governance challenges, and stakeholder conflicts. And this issue has high strategic importance because it sits at the top of the SWOT as both Cartn's most urgent weakness and its most transformative opportunity. And the board will be discussing it every meeting. So let's take those likely issues a little bit further. Okay, so what issues are you likely to come across if sustainability is in this form? Okay, well, research and development, investment decisions for recyclable packaging. We talked about that a lot in the pre-scene, and this is perhaps the most likely form. You may be given some information about a proposed investment, maybe a new material, a new process, a potential acquisition of a technology company, and asked to evaluate it. Now, the challenge will be identifying and quantifying the cash flows, accounting for the uncertainty in both the timeline and the commercial outcomes, and factoring in the non-financial benefits around brand, regulation, and client relationships. Now, capitalizing versus expensing development costs, that's another likely issue. And this is an IAS 38 in a practical context. Now, the question is whether Cartn's R&D spending on recyclability qualifies for capitalization as an intangible asset or must be expensed as incurred. Now, the answer depends on whether the project has reached the development stage and meets the 6 IAS 38 recognition criteria. Now, this is directly relevant because the pre-scene shows Cartn's intangible assets as $142.6 million, and that's unchanged across 2 years. So maybe the examiner could ask you to discuss whether current R&D activity should be capitalized and why. Circular business model evaluation is another likely issue. A scenario where Cartn or a competitor is considering a take-back scheme, a closed-loop recycling partnership, or a business model where packaging materials are recovered and reused. So maybe you would have to evaluate whether the model creates genuine circular value or is essentially repurposing dressed up as recycling. And the penultimate issue we've got here is regulatory response. So perhaps a new law or tighter regulation restricting non-recyclable packaging, perhaps banning certain laminate constructions or requiring minimum recycled content. And you might have to evaluate how Cartn should respond strategically and operationally. And then finally, we've got sustainability disclosures and integrated reporting. So the examiner may present a scenario where Cartn is preparing or reviving its integrated report and ask you to advise on what sustainability information should be disclosed, how to present the emissions data, and how to handle the recycling versus repurposing distinction transparently. Okay. So there's some issues that could come up under this broad topic. And if they do, what kind of key points should you be making? Well, the most important analytical distinction in any sustainability task is recycling versus repurposing. Now, recycling, as we know, means material is recovered and returned to its original state for reuse. So, for example, glass is melted back into glass. Now, repurposing, on the other hand, means the end-of-life material is converted into something different and useful, but it's not returned to its original form. Now, we know Cartn's currently repurposes. That is not the same as recycling, and examiners are going to reward candidates who make this distinction explicitly. Now, the issue here for Cartn is the laminate construction. Now, the layers are permanently bonded with adhesive, so standard recycling processes simply cannot separate them. So this is a product design problem. It's not an operational one. Solving it requires a fundamental redesign of the laminar architecture, which is why the R&D program is significant and why it sits under the product development director rather than the operations director. Now, IAS 38 draws a clear line between research and development. Research costs must be expensed. There is too much uncertainty to capitalize them. Development costs can be capitalized, but only once the project is technically feasible, commercially viable, the company intends to complete it, has the resources to do so, and can reliably measure the expenditure. Now, for Cartn's recyclability R&D, the question of which side of that line the work currently sits on is genuinely uncertain. Now, the pre-scene says it's in progress, but of course, as we've mentioned time and time again, it doesn't specify the stage. Now, that uncertainty is itself the answer. You cannot assume capitalization is appropriate. Sustainability credibility is a commercial issue, not just an ethical one. So Cartn's food manufacturer clients have their own sustainability commitments, and if Cartn cannot offer a credibly sustainable packaging solution, those clients may switch to alternatives, cans or glass, or a competitor who has solved the recyclability problem first. So first mover advantage on recyclability would be a genuine and potentially decisive competitive differentiator. And then finally, we've got capital allocation being a constraint. Again, another issue we've talked about time and time again. Now, the 79% dividend payout leaves only 23.3 million retained per year, and a global recyclability R&D program is gonna need more than that. So that means either reducing the dividend, increasing debt, or finding a partner to share the cost. Any investment recommendation must address the funding question, not just the strategic rationale. Okay, and then finally, what relevant theory should you be looking at here? Well, we've got IAS 38, intangible assets, and that's because this standard governs how research and development costs are treated. Now, we know research costs are always expensed. Development costs are capitalized only when 6 criteria are met: technical feasibility, intention to complete, ability to use or sell, existence of a market, availability of resources, and ability to measure reliably. So in the exam, always run through these criteria against the specific scenario rather than assuming that capitalization is just appropriate. We've also got integrated reporting framework. So this is a sustainability and corporate reporting framework that asks companies to report on how they create value over time across 6 capitals: financial, manufactured, intellectual, human, social and relationship, and natural capital. Now for Cartn, natural capital is the most relevant. Now the laminate recyclability challenge, the material sourcing impacts, and the emissions intensity all affect natural capital. Integrated reporting also requires disclosure of the connectivity between these capitals, how decisions about financial capital affect natural capital and vice versa. Now this is directly relevant to Cartn's capital allocation tension. And then finally, I've got core activity A on screen: evaluate opportunities to add value. Now this is one of the 5 MCS core activities that every task is mapped to. It covers capital investment appraisal, business model evaluation, and identifying and evaluating strategic opportunities. So when you see a task involving R&D investment, circular business models, or sustainability strategy, it is almost certainly mapped to core activity A. Now, the assessment outcome you are likely to be tested on is select and implement suitable business models that will create sustainable value for stakeholders. And that means not just evaluating the financial return, but assessing the value created for clients, for regulators, for consumers, and the environment. Okay, so there's issue 1. That's the form of this video. Let's move over now to issue 2, which is financial reporting. Now, financial reporting is regularly examined at MCS level. It tends to appear in at least one task in most exam sittings. Now, at MCS, the financial reporting questions are more complex than at previous levels because they are embedded in strategic contexts rather than presented as kind of standalone accounting exercises. A new overseas facility, a currency movement, a consultancy contract that overruns. All of these create financial reporting questions that a finance manager would be expected to address. Now, for Cartn specifically, the pre-scene explicitly flags 3 IFRS standards in the introductory pages: IAS 21, IAS 38, and IFRS 15. Now, that is an unusual level of specificity, and it is a direct signal from the examiner about what is technically in scope. Financial issues are also frequently embedded within strategic tasks. So a question about the consultancy's performance might require you to apply IFRS 15, while a question about the overseas manufacturing facility might require you to apply IAS 21. Okay, let's think about some likely issues here. Well, firstly, I've got IAS 21, foreign currency. So we know that Cartn operates 27 factories worldwide and consolidates into Harlan dollars, or Harlandian dollars, I always forget. Now, if the Harlandian dollar strengthens against the currencies of countries where Cartn's factories are located, the translated value of those overseas assets falls. Now, this creates a translation loss that goes into the currency reserve and equity, not through profit or loss. So the pre-scene already shows a negative currency reserve of 14.7 million. Now, a scenario may give you a specific currency movement and ask you to explain the accounting treatment and its impact on the financial statements. IFRS 15. That's consultancy revenue recognition. So consultancy contracts are priced on time and seniority. Revenue under IFRS 15 must be recognized in a way that reflects the transfer of value to the client, typically on a stage of completion basis. So where a project overruns, the question is whether the additional costs can be billed to the client or must be absorbed by Cartn, and how this affects the revenue and cost recognized in the period. This is a specific and examinable judgment. IAS 38, well, we cover this in issue 1 in the context of the recyclability R&D, but it can also arise in relation to the existing patent portfolio. So we know there's a static 142.6 million balance, the amortization question, and the accounting treatment of a specific patent. Transfer pricing and its financial reporting implications finish this off. So where an internal transaction is priced between Cartn's manufacturing and consultancy divisions, or between entities in different tax jurisdictions, the transfer price affects reported revenue and costs in both entities. So the accounting entries, the impact on reported profit, and the disclosures required are all financial reporting questions. Okay, let's go on to the key points to make for financial reporting. So the most important distinction for IAS 21 is between translation and transaction effects. Translation affects equity. So when you translate the balance sheet of an overseas subsidiary into Hollandian dollars at the closing rate, then gains and losses go into the currency reserve in equity, not through profit and loss. Now, transaction effects are different. So when Cartn invoices a client in a foreign currency and then the rate moves before payment is received, the resulting gain or loss goes through the income statement. These are two different mechanisms, and examiners will test whether you know the difference. For IFRS 15, the key principle is that revenue is recognized when, and to the extent that, control of the service is transferred to the customer. Now, for a consultancy engagement, this means recognizing revenue as the design work progresses using a measure of completion, such as costs incurred to date as a proportion of total expected costs. So where a cost overrun occurs, the treatment depends on the cause. So if the client changed the scope, additional revenue can be recognized. And if Cartn underestimated the complexity, the additional cost is Cartn's to bear, and revenue recognition is not increased. And you always need to explain the impact on the financial statements, not just the accounting treatment. An examiner wants to know the journal entries, yes, but more importantly, they want to know whether profit goes up or down, whether assets or liabilities change, and what the effect on key ratios like gearing or return on capital employed might be. Now, the static IAS 38 patent balance has multiple possible explanations, not just one. It may indicate the new patents have been capitalized at roughly the same rate as amortization, representing a healthy self-renewing portfolio, or it may indicate limited new capitalized development with current R&D still at the research stage. Or amortization and additions may be offsetting each other by coincidence. The pre-scene doesn't resolve this. So presenting multiple explanations would be the technically accurate position and is more likely to score marks than asserting a single cause. Okay, and I'm just going to flag some relevant theory now because we've kind of been through it. IAS 21, IFRS 15, IAS 38, we've kind of talked about that already. And I've also highlighted core activity D here, measuring performance. So this core activity covers financial reporting, ratio analysis, and accounting treatments. Now the assessment outcome here is recommend appropriate accounting treatments and explain their implications for users of the financial statements. And that means that examiners want the treatment, the journal, and the so what for the reader of the accounts.
Our final clip is from our mini mock debrief video. We produce a range of mock exams for each sitting, and alongside each of those mocks is a video debrief. And in these debrief videos, our experienced tutor analyzes every question and takes you through a step-by-step guide on the best way to approach them. And by watching debrief videos, you'll learn to understand how to pick out all of the key information in the task and the requirements. You'll use that information to build an effective plan. Many students fail due to poor answer planning. And then that will help you to formulate an excellent answer. So in our sample video, the tutor will take you through question 1 of the mini mock.
So let's go to subtask A first of all. And we can see we've got a keyword here. We're going to highlight that lovely keyword. The keyword is telling us how we are going to get our marks. So in this case, we've got to evaluate. Okay, so what does evaluate actually mean? So evaluate, we're not just listing things, are they? When we evaluate something, we have to weigh them up. So in some case, there's going to be some kind of balance, or should I put a judgment? If I write judge on there, okay? But okay, we know we're not listing something, but what exactly is it that we have to evaluate? Well, here we go. The options, so we're evaluating the options that Cartn has available to it in developing or adapting its business model. So I'm going to stop there. So what information have we come up with so far? Well, a key word here that I have highlighted is business model. So I'm thinking, okay, what do I know about business models? We're developing or adapting Cartn's business model. Well, is there a specific option for this? Well, I'm kind of thinking, well, about developing or adapting business models, I'm thinking E2. And I'm suddenly thinking about buy and partner and build and invest and incubate. When I'm thinking about options to changing it, strategic options. So that's what I may be thinking. I'm just going to write B, P, B, I. Okay, so that's kind of what I'm thinking at the moment. That's a potential framework. But obviously, that's all we've read so far. That might all change. In response to Valbox's new strategic partnership. So again, we don't really know what that means. But what we do know is we are responding to a kind of competitive threat. And I will try and write in without drawing out handwriting to make it a bit more legible for you. So we're responding to a competitive threat. So we're evaluating, developing or adapting our business model in response to a competitive threat. Okay, so I think we're getting a pretty good handle on how that question is going to come together. Like, obviously, we need more information. We kind of need to know what the competitive threat is. Now, obviously, the options we've got available to us to changing our business model, I think, are these. So we often say we try and want to go for a framework that we can use, because obviously we can use a framework beautifully then to structure our answer. And it gives us one less thing to have to think about if we can just use a lovely framework to give us the structure to our answer. Okay. Let's move on, because now we can move down to subtask B. We got a keyword straight out of the box here, which is explain. So obviously explain is different from evaluate. We're not looking for kind of the pros and cons and the judgment of evaluation. We're kind of basically naming something, then describing how it works, and maybe showing how it applies. So what should I do here? Describe. I'm going to put a plus application, just in case. Okay. So what exactly are we describing and applying? What are we explaining? So the next part is showing how we could use an appropriate approach to improving efficiency and managing costs. Improving efficiency and managing costs to make our packaging manufacturing operations more efficient without compromising product quality or safety. Now, two things have jumped out at me here, which is why I've highlighted them. We've got efficiency and cost. Now, obviously, when I'm thinking about efficiency and cost, that is pointing me towards lean manufacturing. Waste elimination. Now, that caveat at the end, without compromising product quality or safety. So that's important. So we aren't just cost cutting. We need to make sure we consider this element throughout the answer. So a bad way to approach this question is to say, hey, just get rid of all health and safety. Cut all training. Put children in front of the production lines. No, we cannot compromise the product quality or the safety. So there we go. We're thinking about lean manufacturing there. We're thinking about build, partner, buy, invest, and incubate in the first model. We've got this kind of information without actually knowing what's going on. Okay, so now we need to find out what's actually happening in this unseen. So again, now we read this information here, knowing that what we're looking out for. So we can pick out the correct information for. So again, we can move through this section fairly quickly, which is, of course, is the aim. So I've attached an extract from the meeting, so we know we've got a reference material to read regarding Valbox's recent strategic partnership and our own operational cost pressures. So basically what we're doing here, that's just saying we've got a subtask A and we've got a subtask B, and it's going to be information in the board meetings, and they're going to be meeting with the finance director later, and they want our advice on the information. Okay, so let's go down now to the reference material. Scroll. So it was a bit laggy. So obviously we've got a nice subsection here to do with Valbox partnership and production costs. Now it's no surprise to say I'm going to guess that's going to be A from the marketing director, and the operations director is going to be in charge of B. Okay, so we've got Hathan Amer, who is the first director that we're dealing with here. Okay, so what do we find out? We'll just get my mark ready. What do we find out in the kind of first part of the reference material? So as I said, this relates to subtask A. So what we're finding out here is that Valbox, who's obviously the main competitor, as we know from the pre-scene, has made an incredibly significant strategic move. So they've partnered with a logistics company called Global Logis, it's a good name, and together they are offering food manufacturers a complete end-to-end packaging service. So they deliver the cartons, and then they come back and collect them, or collect the used ones afterwards. Now the really important bit is that this completely removes the end-of-life compliance headache from the food manufacturers. And we're already seeing this because the dairy clients, here we go, have expressed strong interest in Valbox's new model because it completely removes the burden of end-of-life packaging compliance from them. So Cartn's current model, where our involvement really just stops the moment the packaging leaves our factories, is now looking like a weakness. So we've got quite a big threat facing us in the first part of the reference material for subtask A. And you can see why we are going to have to adapt, and you can see why now we're having to evaluate our options when it comes to our business model. That all kind of makes sense. So I kind of feel the business model, the build, buy, etc. I think that's a good place to structure our answer, okay? Then we're going to scroll down to subtask B, not subtask B, yeah, it's subtask B, and it's the B part of the reference material. Now this one is kind of internally focused, as we would expect. And what we find out here is that the switch to more sustainably sourced paperboard has slightly changed how the materials behave, and that creates a kind of operational headache because the machines have to run at slower speeds and have to be recalibrated more frequently by the operators. Now, what we're seeing here, is more downtime, inventory building up, more scrap, overtime going up. Now, every element of that is a form of waste. So this is confirming really what we said when we read the question, that lean is the right option here. And in fact, let me just highlight, this is where all the waste elements come in. Machine downtime, work in progress, inventory building up. I didn't handle this bit. And defective cartons. As final inspections means scrapped a greater number. And then of course overtime costs as well. Struggling to meet client delivery quotas. Okay. So now we know what we're going to do. It sounds like we've got quite a lot to do, actually, isn't it? So we better get cracking because Cartn is going to fall apart unless we get to these answers. So here we go. Now we are at the answer page. Okay, so let's remind ourselves how long we've got. So we had 27 minutes in total. And actually what we said is we'd have about 5 minutes of planning. Now, remember that was 9 minutes overall. And you can kind of see how the planning time brings together because we're going through the reference material at the same time, the context at the same time. So we'll clear that once, but we're kind of allowing ourselves 22 minutes. Now, of course, we're going to write 7 paragraphs here. You can see I've kept the framework idea with a recommendation at the end. So we know that we are going to have about 3 minutes per paragraph, okay? So again, we can stay really focused on our schedule because, you know, if we are at 20 minutes by paragraph 5, we know we have got to really speed on. We've got to get going. We've got to make some recommendations. Now, before we actually get going with the options and evaluating the options, remember, evaluate is the key term, which is why we've got a recommendation at the end, because we want to evaluate the good and the bad of each, then make a recommendation. We've got to kind of set the scene. Now, we know that Cartn's kind of current model is make and sell with the involvement ending at the factory gate. Now, we know that Valbox is now offering life cycle value beyond that. We know already that dairy clients are already interested. So this isn't a distant threat. It is an immediate threat. Can you see how we're setting the scene here? So what we're trying to do in this paragraph is show the examiner we understand the strategic context before diving into options. Valbox are doing this, we do this, this is what Valbox is doing, this is why it's such a good move, this is our issue, this is our time frame. That's our kind of first paragraph. And then we're coming on to buy. So what we could do with buy, well, we could acquire a recovery specialist. Okay, so this could be recycling or a repurposing business. Now, the upside to this is obviously there would be speed and control. We know the benefits of acquisitions, don't we? It's speed, control, we get the capability quickly, but also there's not just a downside. There's not just an upside, there is a downside too. So the downsides with acquisitions are major capital outlay. This is outside of Cartn's core expertise. There's always integration challenges. So you can see here, we're giving our idea and then we are evaluating it. But of course, we've also then got to link it to Cartn too. Well, we know laminated cartons are difficult to recycle. So obviously the right acquisition needs that specialist capability. Then we move on to partner. Now this is with a kind of an alliance with a logistics or waste partner. So very similar to what we've seen Valbox do. So here, Cartn would bring consultancy expertise and client relationships. So a logistics or waste partner would bring the collection and the recovery network that Cartn lacks, and that would help build on the strengths that Valbox doesn't have, because remember, they've got no consultancy. So Cartn is differentiating rather than just simply copying. Now, the downsides here are going to be shared profit and reduced control and reputational risk if the partner fails. But obviously, this is pretty good for speed, it's pretty good for cost, and it's pretty good for fit. So this is sounding like it's a pretty good option so far. Or we could build organically, so develop our own kind of way of doing this. So that means obviously we'd have full control. So I'm just going to write organic here, over operations, which is good. We're going to be adhering to our standards such as quality and safety all the way through, but also we know that organic growth is slow and it's pretty expensive, and we know the Valbox is already trying to poach some of our customers. We've got an immediate threat here. So we might not have a chance to build this and get operational. So, okay, there's good points to this, but actually, there's a big timing problem, which I would suggest rules this one out. Okay, or we could invest. So this would be kind of a minority stake in an external business. That's got all the relevant technology we need. So again, lower costs and disruption than full acquisition. We'd have that access to innovation. But obviously, again, we're not getting that kind of immediate response to this kind of closed loop service. So longer term supporting strategy alongside the partnership, this wouldn't be the main response. And then of course we could incubate, well that fits our kind of innovation and consultancy culture, but again it's quite a slow burn. Okay, doesn't address that immediate threat. So again, I'd say we couldn't do this. So then we come down to our recommendation. This is where we bring everything together. So I'd say invest, incubate, build. They are too slow because of that immediate threat. Buy seems to be too risky now. It seems to be very expensive. We've got all the issues that acquisition gives us. But I would suggest that partnership is the most appropriate immediate response because it builds on existing strengths, it adds life cycle capability, and it still differentiates us from Valbox. And remember, we could then perhaps buy them in the future if we do want greater control. So there we go. That is our kind of clear judgment. In fact, I did that there. Clear judgment. Justified reasoning. Okay.
So there we have it. 5 key videos to get you started with your exam preparation. I hope you found them useful, but the reality is that this is just the starting point and you'll need to do a lot more preparation over the next few weeks to improve your chances of passing this tricky exam. And to that end, we have a number of options available. The video clips you've just seen are taken from our course content. And our courses are designed to help you ultimately pass the exam. We want to minimize your study time. And of course, we want to ensure that you're getting your value for your money. So if you want more of what you saw today, you want to check out our full pre-scene analysis pack. And that basically includes the full videos from which those clips were taken, from the pre-scene analysis videos through to the top 10 analysis, the strategic analysis, industry analysis, and in addition to that, we've also got 30 pre-scene questions that are designed to help you consolidate your knowledge and understanding of the pre-scene company. Pre-scene analysis is a crucial first step, but passing the exam requires developing your exam technique and lots of practice. So the best all-round comprehensive solution is the Astranti Premium course. On that, in addition to everything you get in the pre-scene analysis pack, you'll also get 5 mock exams. And those mock exams are written according to the pre-scene company. They're not generic and they don't have generic solutions. They're applied to the pre-scene and they're based on the top 10 issues. So you'll get questions in the mock exam that they'll have a good chance of coming up in the real exam. In addition to those mock exams, you can get mock marking and feedback. And this is where you'll submit a mock exam to your dedicated marker and they will mark that and give you a fully annotated script with feedback and annotations. And they also provide a 9-page document with feedback that you can apply in your next mock. In addition to that, we've got our exam technique video series. Exam technique is really important in this exam. And so our exam technique video series has 13 chapter study texts and accompanying videos taking you through every aspect of exam technique, right from understanding the exam through to interpreting the requirements, answer planning, writing technique, and time management. Really valuable course that will help you a lot developing those soft skills that you need to do well in this exam. Alongside that, we have 3 live masterclasses that run throughout the course, from the first one that's looking at the pre-scene through to later ones that look more at exam technique and theory revision to help you get ready. Included in the premium, you get access to tutor and mentor support, and you'll be able to access our discussion hub where you can post your questions and talk with other students and tutors about any questions and queries you may have. And our premium course comes with our double pass guarantee, and that's exclusive to premium course students. It's a double guarantee because If you don't pass, if you take this course and you don't pass the exam, we'll give it you again for free with no extra charge. And you also have a 14-day money-back guarantee. So if after 14 days on the course you're not happy, you can get a refund, no questions asked. So whatever your situation, we believe we have the solution for you at Astranti, and you can find out more at astranti.com/CIMA. Thanks for watching.